Hi, I'm Jason Seagrave, one of the founders of MGC Hales. Welcome to our Copperfish Business Advice video. Today we're going to cover the deadly tax deadlines and timings. The rules for limited companies and the self-employed are different, and so you need to know what you're trading through before you can understand the deadlines. Let's start with limited companies, as they're the easiest. If you're trading through a limited company, your year end could be any day of the year, but the year end is usually at the end of the month. You are normally allocated a year end, finishing at the end of the month 12 months from the day that you incorporated or formed the company. So if you formed your company in December 2014, your first year end will be 31st of December 2015. Your financial statements are due to be filed within 9 months of the year end at Companies House. Any corporation tax is also due on the same day. Perversely, your company tax return is not due until 12 months after your year end date. So you pay your tax 3 months before you submit the return. Weird, eh? As you need to calculate your tax in order to pay it, most people submit the return at the same time as the accounts. At MGC Hales, we promise with your help to file your accounts and returns within 4 months of the year end, so our clients don't have to worry about this. If you're self-employed or you're in a partnership, then you declare your income through either your personal or partnership tax return. And these have to be filed each year by a set deadline that isn't affected by your business year end. You declare your accounts information on the relevant tax return depending upon which year end finishes in the tax year. The tax year runs from 6th of April one year to the 5th of April the next. So if your year end is July 2014, then this falls in the period from 6th of April 2014 to the 5th of April 2015, and so is declared on your 2014-15 tax return. The tax returns have to be filed by the 31st of January after the year of the tax year. So for 2014-15, this will be 31st of January 2016. Your tax for that year is also payable by then. That is the position for self-employed and partnership businesses in the years once they are established. Things are slightly more complex in the year that you commence trading. Simply put, in the first year of the business, you have to declare your income from the date you commenced up to the end of the tax year in which you commenced. In the following year, you declare the income up to that year ending in the tax year as normal. You'll have noticed that part of your income would have been declared twice, the bit taxed in year one. This is called overlap profit. This amount is recorded and then deducted from your income when you cease trading or change your year end. An example might help here. Ant Ordek started his business on 1st of July 2013 and prepares his accounts to the 30th of June each year. His profit for his first year of trading to 30th of June 2014 was £120,000. His profit for the second year to 30th of June 2015 was £150,000. So in 2013-14, he will be taxed on the period 1st of July 2013 to 5th of April 2014, so 9/12 of £120,000 or £90,000. In 2014-15, he will be taxed on the year end of 30th of June 2014, so £120,000. And in 2015-16, he will be taxed on the year end of 30th of June 2015, so £150,000. The overlap profits to be claimed in the future will be £90,000. This is the amount duplicated. Whilst the tax payments don't change, they also get a bit tricky in the earlier years. Let me explain. For each tax year, you should make 2 payments on account and then a balancing payment. The first payment on account is 31st of January in the tax year. The second payment on account is due 31st of July after the tax year, and the final balancing payment is the following 31st of January. So for 2014-15, the first payment on account is 31st of January 2014. The second payment on account is 31st of July 2014, and the balancing payment is 31st of January 2015. In the first year that you pay tax, you won't have paid any payments on account, so the balancing payment is always the total amount due for that tax year. From then on though, you have to make payments on account, and these are calculated at 50% of the tax due for the previous tax year. So Ant or Dec, above, would make a balancing payment for his first tax year on the 31st of January 2015, but he will also need to make a payment on account for his second tax year on the same date, and then another on 31st of July 2015, and so it would continue. One difficulty for new businesses is that they pay no tax for quite a long time. In Ant or Dec's case, over 18 months, but when he does start paying, he pays 2 years tax in a 6-month period. You need to start saving for your tax the minute you start making profits and put it away. Many self-employed people put this money into offset mortgage arrangements. So that's a whistle-stop tour into those deadly tax deadlines. If you have any specific questions, then just pick up the phone or come along to one of our bi-weekly surgeries. If you found this useful, please follow us on Twitter or subscribe to our newsfeed by going to our website, mgchales.co.uk. Thanks for your time.